What is going up, traders? I hope you guys are all having a fantastic day today. So in today's video, we're going to be talking about stock splits and reverse splits. Now this is a very, very important idea to understand, especially if you're a new trader and you see a stock that's up 800% in a single day. What you could do is look to see if it had a recent reverse split. Now, what is a reverse split? This is when a company decides to offer less shares that are available to trade. When doing this, it will drive that price up just because there's not a lot of shares, and if you still have that same volume, it will increase, in share price, which it's very, very simple to understand. It's not too complex. But this is pretty much how you get those big, massive moves, is just by a company offering less shares, doing that from supply and demand. If you have more supply and the same demand, the price is going to decrease. But if you have a lower supply and the same demand, the price will increase, if that makes any sense. So, this is pretty much how you get those moves from 40 cents like it was trading at all the way up to $8. Yes, this was a kind of a good little setup here for a gap and go. It worked very, very well. It did get halted for a little bit for a circuit breaker, but that's common. We'll cover that in another video. But you can make very, very good trades from this. And what you never want to do is chase. Always right out of the open. You can pretty much get a good idea if the stock will increase, just because if it's maintaining those pre-market highs and it did not fall off, that is a good indication that the stock is weak and it will not have a good day trading. So within the first 2 minutes of the market open, it did go up, around, around 32%. It did get halted, right here at around 20%. It got halted for about a minute or two. I'm not 100% sure, but I did get some shares actually filled around that 675 area, just because it was that pre-market. That was where the pre-market highs were. It broke out, and I sold at that 750 area within that range. But the thing you always got to be careful of with these types of reverse splits is normally the spreads are very large, like it was in here. Hit a high of almost $8, hit a low of almost $6. Hit a low of almost $6. So you always got to be cautious of that and understand where you set your stops, just because this is going to be a very, very riskier trade, especially after this big gap up. Now you don't know whether it's going to go up or down. And when you see a stock that has two almost identical candlesticks right next to it, is kind of a tell sign that it might start to fade off, just because you don't know if the buyers or sellers are in control of this stock. So it did actually just begin to fade off, and it rode these moving average lines very, very well. But it did have a negative trend line, so I did not trade it after this. I took that profit of around 130 something bucks. And you might be saying, well, Carter, that was around 17%. How come you didn't make more? Well, with these types of stocks, these reverse splits, I always go lower share size, just because of how large the spreads are. And if it begins to fade, I'm only out for a small loss, and then the upside potential is a lot larger. So I never want to risk too much, but I always want that reward to be higher, if that makes any sense. But yeah, so that's pretty much what a reverse split is. It's when a company decides to offer less shares than it was. Doing that, it drives that price up, and this is what many traders look for, just because of how volatile those stocks are. But so that's it, though. I hope you guys enjoyed this video. Please sure to like, subscribe if you're new, comment if you traded LMFA today like I did. So that's it, though. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week.